Good evening. Ira Epstein of Linden Associates with your SPDR ETF wrap-up, and this wrap-up is for Thursday, the 29th of July, 2021. So the world had a chance to react to our FOMC announcement and the Fed chair press conference. Remember, it's 14 hours later in Asia when he speaks here in America at 1:30 in the afternoon. They embraced it as bullish. We then saw Europe embraced it. We saw that the Senate last night also passed the vote, not on infrastructure to go forward, but to debate to go forward. Big difference. You get 19 senators, and they're smart. Why not vote to at least talk about it? I think you can carry that back to your home states. That looks good. Voting against it, I have that closed of a mind? No. Doesn't mean you have to pass it. Doesn't mean you know what the terms of it are. We know that. Even Ms. Pelosi, who wants a bill, doesn't know what it's about yet at this point. How are you going to pay for it? There's a lot to be done. And lurking in the background is the budget. So we've got to talk about that. Give you an idea how the market interpreted everything and why they looked at it bullish. When U.S. GDP came in at 6 point, I think it was 5% or 4% today, that was 2 percentage points under the trade estimate. The market didn't even do this, didn't blink an eye. It just kept moving to the upside. So bearish news is bullish because they'll say, the reason it wasn't as good is the supply chains were holding back things and the economy could have grown further. That's what happens when you have a bullish scenario. When I look at ARK came back up into this key resistance area, and you really have a pattern of a higher high and a lower low. That is not a trend. The market is fighting. If you take a look, it had gotten over here, come off these lows back to that line in the sand, the 18-day average. Support then comes in at the 200-day and then the 100-day. And this is back on Monday, the beginning of this week. The market goes to a swoop to the downside, cuts first through that 200, then into the 100-day average, comes back up yesterday to the 18-day average in this number, the 200, and today just ever so slightly over it. Okay, it's not the beginning of something necessarily just yet. And when I put on the Bollinger Bands, you didn't even hit the band on the bottom part. You just missed it. What about momentum in the chart? Well, as I look at the momentum in the chart, let's see right here, it is now corrected an oversold condition and gone back to neutral with the market. That's how I'm reading that chart. Apple, the easy money, where the market was in a pattern of consistent higher lows pushing to higher highs, broke that pattern when you took out this low right here and has no pattern that's a trend at this point. So I just look at the market. It had overbought, correcting it. Okay, there's other places to put your money. PAVE is one of them. Let's just step back here. This is yesterday with PAVE. PAVE has been with a pattern of higher lows, higher highs. The target, if it can go up, and I don't know if it would or wouldn't, but I guess that it would, is the upper Bollinger Band, and bingo. Now, what I teach in my enhanced Bollinger Band course, which is on our website at www.iraepstein.com, is how you handle first times you hit Bollinger Bands, and what do you do if you don't have an embedded reading or you do. That's the importance right there. I think the pros came out today. Now, that's the good news on PAVE, that it made the run. Now we have to get things passed. That's the hard thing. But do I think it's going to happen sooner rather than later? Well, something has to. Remember Congress. They want to go home on vacation for 5 weeks. August 9th is the scheduled break date in the Senate. Do you think they're not going to get things done between now and then? Remember this. Wave your finger. Senators don't like to give up their vacations. They'll procrastinate till it affects them. That's how I view politicians, as a group. I'm sure there's very good ones and very bad ones, but as a group. Sideways action right here, caught in the upper and lower bands. But the bigger picture in this XLI is this. The market's got sideways action. Now, a couple of things happen. If we take a look at XLI, both numbers, the embedded readings are over 80 there. What about the day before? No. So Tuesday, Wednesday, Thursday. That's embedded. What else? Let's go back to yesterday. A double whammy on this trade. Here is a trade with an outside day down. I'm creating a new course for you on how to play outside days. I've developed something that I think most of you don't know. Outside days pop up on charts all the time, up or down, and there's a way to play them. If you take out the high of an outside day down within 2 trading sessions, which you did today, I think the market's going to make a run at the closest moving average above it, which there aren't any. They're below the market right now, or the Bollinger Band. I'm wrong if the market takes out the low of that day, which would be 92.40 in this case. Now something else. Now you're embedded. So you have a double whammy play. You have 2 things going for the trade. Doesn't mean they'll work, but you have 2 things. First thing is I don't want to see it under 92.40. Second, until the embedded reading is lost, it can afford to back off and gather more buying, lose that reading. Then I'm only looking for the 18-day average of closes. In XSD, I'm looking at the pattern here of a lower low, higher high. The market's got momentum pointing up. I'm looking for resistance at 191.82, but it doesn't have to go there. Why? Because you're not in a trend. So if it goes, terrific, but look at the momentum reading. You're already overbought. I wouldn't be playing around with that. PODX, I was looking when you lost the embedded reading to get back to the 18-day average, and that was about it. I got what I was looking for. When momentum is lost, you often go back to that line in the sand and try to figure out what to do. There's no trend there that I'm seeing. In ESGU, the trend is up. Higher lows, higher highs with an embedded reading. Therefore, under my enhanced course, on the pullbacks in this market, I am looking for the pros to support it. So there's a way you do that if you're looking to enter. I'm not going to discuss it here. I want you to take that course. XLE, what did you end up doing? Going right to what we were talking about. So here's a market that was, if you come all the way back with me here, here's a market that's embedding. Both numbers are under 20. First day right here, second day, third day. If you lose that reading, often the market is going to make a run at the closest moving average. Now, when it first lost it, the closest moving average was the 100, then the 18 was crisscrossing towards it. You can see that. It stays lost. You don't go back under these important lows. Now the target shifts from the 100 to the 18-day. It doesn't have to happen in the one day, but you tell me what happened and where the market just sort of stalled out. Again, I teach these things in my charting course. EFA, the emerging markets. All right, what do you do with this? You got higher lows, higher highs. It's all systems go except it's overbought. But in an uptrend, I'd say there's a lot of support back here at 78.92. I do not think you're going to gather the trade support the way that you necessarily think there if you stay overbought. If you get a correction, fine. If the next week turns into an embedded reading, well, then you can get an exciting story, but that's a what if, and I don't know if it's even close to it. In gold, the first challenge of the 200-day average and the upper Bollinger Band, bye-bye would be my type of money. That doesn't mean it can't go higher, but the gravy's out of the trade. It's that simple. You still have momentum pointing up, not trending. I thought the market was making a big stand. If you'll recall, you've watched me each night here between the 100-day and with resistance at the 18. It finally made its pop. I had told you I had futures traders that were following that on the long side, and they had a good day today, obviously. In GDX, another one of these trades where I'd be saying, out you go. Why? First challenge of the upper Bollinger Band. Now you got these big layers of resistance over it. It's about taking the center out of the meat. It's not necessarily catching the last piece of it. You don't need that off the bone. Could it go higher? It sure could. But its odds, excuse me, are it's in a resistance area. TLT, you have the trend down, the bias up, momentum flat. Not much you can do with that. FXE, this is the euro. What do you do the first time you hit an upper Bollinger Band? Well, you should know that. So I didn't hold a live webinar this week. I'm going to hold one next week. I just got back from vacation, had to catch up, obviously, with a lot of things in my own life this first week. So we'll be back on that rotation. I'll send out invites for that next week as well. They might come out Sunday or Monday if you're on my mailing list. If not, sorry, get on it by going to our website at www.irapstein.com. You'll see free offers. Choose any of them. You get on the website that way. I'm Ira. Take a good day. Have a good day.